How is everyone doing today? Welcome back to another episode of The Banker Next Door. I am your host, Dr. Joe Berquist. Today I have the 27th installment of the crypto series, and I have a whole series of articles that I'm going to run through with everyone here today, just bringing you up to date on all the happenings in the crypto world, as I have generally been doing in these crypto series episodes. So without further ado, let's jump right in because I got a lot to run through here with you. So starting off here today, so the hottest business strategy this summer is buying crypto. So small companies are raising billions of dollars to buy Bitcoin and other more obscure cryptocurrencies. What could possibly go wrong? So it's the hottest trade of the summer. Companies are raising tens of billions of dollars not to invest in their businesses or hire employees, but to purchase Bitcoin and more obscure cryptocurrencies. A Japanese hotel operator, a French semiconductor manufacturer, a Florida toy maker, a nail salon chain, an electric bike maker. They're all plowing cash into tokens, helping to send all kinds of digital currencies to record levels. News that a new company plans to buy crypto is enough to send its shares flying, spurring others to consider joining the frenzy. Since June 1st, 98 companies have announced plans to raise over $43 billion to buy Bitcoin and other cryptocurrencies, according to Architect Partners, a crypto advisory firm. Nearly $86 billion has been raised for this purpose since the start of the year. That's more than double the amount of money raised in initial public offerings in the U.S. in 2025, according to Deal Logic. Skeptics say the rush of companies buying crypto is a sign the market is overheating, noting that digital tokens, especially the obscure ones, are notoriously volatile and have uncertain futures. They scratch their heads about why an investor would buy shares of a company purchasing cryptocurrencies when they can buy them on their own through low-cost exchange-traded funds and other vehicles. Others note that many of these companies are worth much more than the cryptocurrencies they hold, as if investors are willing to pay $2 for a $1 bill. You know, that hasn't stopped big name bankers, investors, and others from jumping in. Mutual fund giant Capital Group, hedge fund D1 Capital Partners, and investment bank Cantor Fitzgerald are among those backing recent efforts by companies to raise huge sums to purchase cryptocurrencies. And then, the rest of the article goes through a bunch of examples there. But in looking at this chart right here, we could see that funds raised by companies to buy crypto in so far this year has just gone through the roof. In March, 21 billion, 7.15 billion in April, 10 billion in May, 23.17 billion in June, 18.27 billion in July. Astronomical here. And then let's go to the next one here. So this crypto treasury firm is vying to be the micro strategy of Ether, but with a focus on generating yield. So when we've talked about MicroStrategy and how they've basically become just this, Bitcoin holding company, if you will. They've literally spent billions of dollars just acquiring Bitcoin. And that's, MicroStrategy is now they want to change their name to just Strategy. But that's their strategy, if you will, is to basically just buy and hold Bitcoin. So now you've got this new company here saying that they want to become what's called the Ether machine. So the Ether machine will begin trading on the NASDAQ under the ticker ETHM through a merger with a blank check company, Dynamix Corporation. The company is the latest in an emerging cohort of new entities aimed to replicate MicroStrategy's successful accumulation strategy, but around Ether. The Ether machine plans to differentiate with a focus on yield generation through staking rather than simply buying and holding the Ether. And then another article on this right here from the Wall Street Journal. Blank check company strikes cryptocurrency deal. The Ether machine plans to manage over 1.5 billion of the second largest cryptocurrency. So Dynamix, a blank check company, plans to merge with another entity to create the Ether machine. So blank check company Dynamix is merging with another entity to create a new company known as the Ether machine. The combined company plans to manage over 1.5 billion in Ether, the largest cryptocurrency behind Bitcoin. It is a bet that investors will continue to reward businesses that pour money into crypto holdings under the industry-friendly Trump administration. So the deal was announced on Monday morning, and this was, a couple weeks ago, confirming an earlier report from the Wall Street Journal. It will be backed by a group of crypto investors, including exchanges Kraken and Blockchain.com, contributing more than $800 million in equity financing at $10 a share. The company says it will also receive a roughly $645 million anchor investment from the Ether Machine co-founder Andrew Keys, who will serve as chairman. David Marin, another co-founder, will be chief executive, and investor Jonathan Christodoro will be vice chairman. Keys said in an interview that his team's experience with Ethereum will set it apart. We've essentially amassed the Avengers of Ethereum. Okay. Ethereum is a blockchain platform that allows users to conduct transactions and enter into so-called smart contracts. Ether is the cryptocurrency that undergirds transactions and interactions on Ethereum. So again, this going after this whole micro strategy concept, just all these companies just investing, just to hold on to Bitcoin, I guess, seeing the thing. Moving along, though, Trump Media builds 2 billion Bitcoin hoard as cryptocurrency swells the president's net worth. So Trump Media and Technology Group said it has accumulated roughly 2 billion in Bitcoin and related assets, totaling about 2/3 of its total liquid assets. Shares of TMTG, which trades on the NASDAQ as DJT, popped as high as 9% when markets opened. Trump's stake in the company, which trades on the NASDAQ under his initials DJT, is worth nearly $2.3 billion. Trump's other crypto ventures include the decentralized finance entity World Liberty Financial and the meme coin $Trump. So, and then just another article here. So Truth Social reports first positive operating cash flow and $3 billion in assets. So the company touts first positive cash flow, 2 billion Bitcoin trove, as it vows to expand through mergers and acquisitions and help advance America's first agenda. So Trump Media and Technology Group, parent company of Truth Social, said on August 1st it ended the second quarter with 3.1 billion in financial assets and posted its first quarter of positive operating cash flow as the company ramps up its cryptocurrency strategy. The company, which went public in 2024, reported cash flow from operations of 2.3 billion for the quarter ending on June 30th, according to a Securities and Exchange Commission filing disclosed on August 1st. Trump Media also revealed that it has built one of the largest Bitcoin treasuries of any public firm, holding about 2 billion in Bitcoin and other related securities, following a 2.4 billion private placement in July, backed by roughly 50 institutional investors, according to a statement. In a very short time, Trump Media has reopened the internet for free speech, created an uncancelable social media platform and video streaming platform, expanding both platforms worldwide, amassed one of the biggest Bitcoin treasuries of any public company, and now we have our first quarter of positive operating cash flow, despite having gone public just last year. Revenues rose by 6% year over year to 900,000, while the company posted a net loss of 20 million, driven largely by 20.5 million in non-cash expenses and 15 million in legal costs related to its protracted merger with a special purpose acquisition company. That merger, one of the largest of its kind, triggered extensive litigation as Trump Media sought to recoup damages from individuals it accuses of wrongfully delaying the deal. So again, a little bit of a profit here, but not much for Truth Social. Still have some pretty large losses there. But the interesting part is the accumulation of Bitcoin there, which is, just interesting there. Just the crypto assets that the company is accumulating at the moment. So, okay, now let's look into, been a whole bunch of team ups recently. So Goldman Sachs and BNY are joining forces to transform 7.1 trillion money market industry with digital tokens. So Goldman Sachs and Bank of New York Mellon have created the ability for institutional investors to purchase tokenized money market funds, CNBC has learned. Clients of BNY, the world's largest custody bank, will be able to invest in money market funds whose ownership will be recorded on Goldman's blockchain platform. The project was already signed up fund titans, including BlackRock, Fidelity Investments, and Federated Hermes, as well as asset management arms of Goldman and BNY. So, and then we go to Ripple to buy Canadian stablecoin platform Rail for $200 million. The acquisition comes amid expected wider acceptance of stablecoins in the U.S. Ripple has rebounded this year with a separate $1.25 billion deal. The SEC also dropped its case against the company. So, cryptocurrency firm Ripple will acquire Toronto-based stablecoin platform Rail in a $200 million deal, the company said Tuesday. The acquisition is set to streamline Ripple's operations by adding virtual accounts and automated back office infrastructure to a framework that uses 60 licenses to manage customers' payment flows, the company said. So again, very interesting update there. PNC and Coinbase to team up as crypto as a service. So the nation's largest crypto exchange and its seventh largest bank are joining in their commitment to a more resilient digital financial system, the firm said Tuesday. So PNC customers will soon be able to buy, sell, and hold cryptocurrency through the bank's new partnership with Coinbase. Partnering with Coinbase accelerates our ability to bring innovative crypto financial solutions to our clients, said PNC CEO Bill Demchak in a prepared statement on Tuesday. We will also provide PNC's best-in-class banking services to Coinbase. He said this collaboration enables us to meet growing demand for secure and streamlined access to digital assets on PNC's trusted platform. Coinbase is the nation's largest cryptocurrency exchange. As of February, it held nearly $500 billion in assets, which would make it akin to the 21st largest bank in the country, according to CEO Brian Armstrong. If you think of us more like a brokerage, we'd be the 8th largest brokerage today by assets under management, he wrote on a social media platform X. Coinbase will support PNC's entry into the digital asset market with its crypto as a service platform, which provides PNC with a powerful set of tools to develop a scalable, high growth business built on a foundation of uncompromising security, said Brett Tejapal, head of Coinbase Institutional, in a prepared statement on Tuesday. So again, really interesting what we're seeing here with some of these team ups and some of these acquisitions in the space. Now let's go to some regulatory news. So CFTC and SEC made quick work on group movement. So both regulators announced plans last week to get going on crypto regulation that aligns with a report by the president's working group on digital assets. They've already made waves this week. Now, back on Monday, if you guys saw, I actually covered that report in the episode on Monday. So if you didn't get a chance to see that, go back and check that out. I cover that report in detail. The Commodities Future Trading Commission and the Securities and Exchange Commission are quickly falling in step with the recommendations put forth by President's Working Group on Digital Assets last week. The CFTC with a crypto sprint and the SEC with an initiative dubbed Project Crypto. It's planned for global crypto market primacy. The regulators are wasting no time in fulfilling President Trump's vision to make America the crypto capital of the world, said Acting Chairman Caroline Pham, who said the CFTC would work closely with the SEC Chairman Paul Atkins and Commissioner Hester Pierce on Project Crypto. So obviously more to come on that. Liquid staking tokens aren't securities, says the SEC. What that means for crypto investors. So the SEC said liquid staking and related tokens don't run afoul of securities laws, addressing the more than $67 billion in total value locked across blockchains. The crypto-friendly guidance was a win for decentralized finance platforms, otherwise known as DeFi. Guidance isn't law and it's subject to change. So investors chasing yield and liquidity in the crypto world just got handed a nice gift from the U.S. securities regulators. The Securities and Exchange Commission announced Tuesday that liquid staking and related tokens don't run afoul of securities laws, effectively flashing the green light to centralized and decentralized crypto trading platforms that offer those services and corresponding rewards, as well as to their customers. The liquid staking guidance is incremental clarity for the crypto industry, following up on its views on protocol staking in May and addressing the more than $68 billion in value locked up across all blockchains, according to data compiled by research platform DeFi Llama. Staking is a collective process in which people pledge their tokens to shore up a blockchain network security and validate transactions. In return for doing this, they earn rewards denominated in the native token. This is sometimes compared to a savings account and the interest they accrue. On the surface, that's true, though staking generally yields rewards not through lending, but through fees generated from people using the blockchain network and a rise in token prices. Liquid staking allows people to pledge their tokens, but also retain the liquidity of those assets through what are called liquid staking tokens, otherwise known as LSTs, also referred to as liquid staking derivatives. For example, Lido and Rocket Pool, two leading Ethereum liquid staking providers, use ST and RETH, respectively. Their customers stake their ETH and use LSTs to collect rewards, sometimes presenting as an annual percentage yield, and or use them on various DeFi platforms to, say, buy other cryptocurrencies. So again, very interesting stuff taking place here. And then trade groups push back on crypto firms' bank charter pursuit. The ABA and other trade groups have urged the OCC to delay approving national trust bank charter applications from Ripple, Circle, and other crypto firms, citing substantial concerns. So in a major pushback against the cryptocurrency industry's banking ambitions, the American Bankers Association and 4 other bank trade groups have urged the Office of the Comptroller of the Currency to postpone decisions on several national trust bank charter applications. The joint letter sent July 17th comes in response to a slew of applications filed since April 2025 by crypto firms, including Fidelity Digital Assets, Ripple, Circle, and National Digital TR Company, all seeking specialized banking charters that would grant them federal recognition and more simplified regulatory oversight. The ABA, Americans Credit Unions, Consumer Bankers Association, Independent Community Bankers of America, and the National Bankers Association argued that the public portions of the applications lack sufficient information for meaningful public scrutiny and that more transparency is needed about the applicant's business plans. So obviously this is a big development, and we will continue to follow this and see what happens in that regard. So now just a couple of quick fraud stories here to wrap us up. So millions stolen, death threats. Should banks do more to fight pig butchering? So scams that trick people into transferring funds fall outside most current fraud protections. Some victims want banks to take responsibility. Now, again, going back to the report issued, the White House report on digital assets, this was one of the things that they talked about, was basically fraud and giving regulators more ability to go after people that perpetuate fraud in these type of cryptocurrency events. In this article in particular, the story, this husband and wife, the husband ends up, losing, I think, almost all their money under basically another pig butchering scam. Just terrible, but it just goes to show you how pervasive these scams are right now and how much of this fraud is still out there. And again, I think if you go back to and look at that White House, the White House report on the working group on digital assets, they put forth a number of recommendations around illicit financing and general fraud and what banks and regulators can do about it. So great stuff, I think, happening there in that regard, but it'll take some time for all that to be developed. And then finally, last story here, developer of crypto mixer Tornado Cash found guilty on one criminal charge. So Roman Storm convicted on money transmitting charge after a closely watched trial. So a co-founder of Tornado Cash, a digital currency mixing service that was used by North Korean cyber criminals to launder stolen funds, was convicted of one of the 3 criminal charges he had faced after a 3-week trial in New York federal court. A jury on Wednesday found Roman Storm guilty of conspiracy to operate an unlicensed money transmitting business, a disappointment for crypto proponents who had backed the software developer's defense. The charge carries a maximum prison sentence of 5 years, but the jury failed to reach agreement on 2 other more serious charges: conspiracy to commit money laundering and conspiracy to violate U.S. sanctions. Both charges could have resulted in 20-year prison sentences. We are grateful the jury did not convict Roman for violating sanctions or laundering money, said Brian Klein, a partner for law firm Waymaker and one of Storm's attorneys. There are serious legal issues with the sole remaining court involving unlicensed money transmission, Klein added. We will not stop fighting for Roman and expect him to be fully vindicated. Roman Storm and Tornado Cash provided a service for North Korean hackers and other criminals to move and hide more than $1 billion of dirty money. Jay Clayton, the U.S. attorney in Manhattan, whose office brought the case against Storm, said in a statement. A spokesperson for the Manhattan U.S. Attorney's Office declined to comment on whether prosecutors would seek a retrial for the 2 counts on which the jury deadlocked. So again, Very interesting thing here. I haven't talked a whole lot, I think, about the idea of the digital currency mixing. That in itself is a whole, kind of interesting thing. I'll have to get into in another episode. But yeah, this gentleman found guilty here on this money transmitting charge. But yeah, I mean, again, I do I feel bad? No, not necessarily, because this guy, as a lot of other people, were getting into this stuff, without there being regulation outside of US, dealing with, again, North Korean money hackers. I mean, that doesn't sound too kosher, right? So anyway, all right, with that being said, that is your crypto update for this week. Again, I will wrap up by saying, if you like this episode, please make sure to like, share, and subscribe, as that always helps the channel. Remember, we are on Rumble, YouTube, and all major podcast platforms. Please be sure to leave your comments down below, as I always love getting back to everybody. And as always, make sure to check out some of the other content on the channel, especially the crypto series. If you haven't checked out any of the other episodes of the crypto series, I cover anything and everything crypto. So, come back and check that out. Check out some of the other content on the channel if you're liking the crypto series. But thank you so much for listening. Have a great day out there, and I will see everyone again real soon. Thanks.